In this video, guys, we're going to look at what to do if price gaps through your stop. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so question from a subscriber. Appreciate all your comments, questions, shares, likes, subscriptions, etc. It is much appreciated. There's a really good group of traders out there who are constantly engaging with the videos. You know what, thumbs up, guys, thank you very much. Okay, so question from a subscriber is what to do if the price gaps through your stop. So scenario is this. Let's imagine we are long, we're kind of sitting here on a nice stock that's going up nicely, doing very well. All of a sudden we wake up the next day, ouch, the thing is right down here. We've happened to pull our stop up to here. So there was our stop. Now this gaps right through. So the first thing to note, guys, is that if we actually had a stop in with our broker, what would happen is we would be executed at the next available price. So say, for example, this was, let's just use $100, say, for kind of argument and illustration purposes. Let's stop at $100. If the next price where it opened, which in this candlestick would be here, was say $80, then our stop would be filled at $80. That would be out of the trade. So if that's the case, then we're just taking out the trade automatically by the stop, because the stop says, hey, if the next trade is below my price, at my price or below, then come out of the market, and the market price would be $80. Okay, so assume that you don't have a stop in, assume that it was a mental stop at $100 and all of a sudden it's gapping down at $80. What are you going to do? So you've got a couple of options really, and this is going to very much depend on your risk tolerance. It's going to very much depend on, you know, how you want to approach the market, what you're trying to achieve, what the setup was, etc. So now, the thing that I think you need to do is you need to plan for it, because the last thing you want to be doing is working out what am I going to do if it gaps through my stop after it's gapped through your stop, because your emotions are going to be heightened, you're going to be concerned about risk, you're going to be all over the place. Well, so if you have a plan of action, then literally all you've got to do when it gaps through the stop is put your plan into place. Just like if you're flying a plane and you have an engine failure, you don't go, what do I do with an engine failure? You go, right, I know there's a checklist for that. Out comes the checklist. What's the engine failure checklist? Engine failure checklist is this. Make sure the mixture is set to fully, whatever the process is for whatever plane you're flying, there's always a process there. And you know that all you've got to do is remember to execute the process. Very simple in times of emergency. Similar thing with trading. There's an emergency. It's gapped through your stop. Ouch, what do? I know what to do. I've got a plan for this. So make sure you have a plan. So in the plan, you could have a couple of things. One is to close half straight away. You know, if you decide to, right, you know what, this is no longer the trade that I want, I'm going to close half straight away. Now, there is an argument to say that you could be kind of closing stuff on a panic. And I think you've got to look at it in this way. The initial thesis for the trade is gone, right? That's it. You know, holding on to this now out of hope, it makes no sense, because you obviously didn't expect this. This is a different thesis. Of course, if you're in for a very, very long term, this is irrelevant and you're probably not bothered by this anyway. You're looking for kind of multiple years. But let's say you were in for a swing trade. This happens to you. Your initial thesis is gone. Now all you're trying to do is to limit the damage of the impact. You're not looking for it to come back and reverse. You're not looking to make your money back. You're just looking to limit the potential damage. You've taken a wound. You just want it to be as, you know, little impact on your P&L as possible. So the first thing you do is, you know, if it's in your kind of makeup and you like to do this, then just close half. You know, you're mitigating the risk straight away, straight off the bat, you're closing half. Then maybe look and research what has happened. Is it something that is terminal? Is it something that's, you know, really quite damaging to the company? Is it a market-wide thing? Is it a sector-wide thing? You know, what's actually happening here? Another thing you can do then is, you've got a choice actually, guys, between this, close half or put a stop in. So what you're doing now is you're at least doing something to combat this risk, right? And it comes down to this last point here, guys. Do something, right? Have to do something. You don't have to close the position up. I'm not saying just close the position straight away. You could close it, which is 0.4. We're kind of skipping around here, but 0.4, you could just dump it. But even if you don't want to dump it, because you don't want to be kind of literally selling on the extreme panic, you're trying to manage the loss, do something. So whether that is, okay, I'm going to put a stop in now, you know, another $2 below that low, or I'm going to close half and put a stop in, or I'm just going to close half and then do some research. Whatever that is, it's the act of taking action that puts you in control. And what hurts people the most in this scenario is doing nothing. You're deer in headlights. You're like, ouch, I've lost way more than I expected. I didn't want to lose that. And then you just see it going down and down and down and down intraday. And you're watching this thing, you're going, damn it, come on, go up, come on, go up, come on. And you get in this situation where you're just trading from an emotional perspective. You're not trading professionally at all, which is why having a plan. So the plan, example plan could be, right, if it gaps down, immediately I'm trimming the position by half. Right, because that immediately takes some of the pressure off. And if you're right and it goes lower, at least you're not in a full boat. If you're wrong and it goes higher, at least you've got something on. So taking off half, then you look at it and then you come up with another plan based on the information you've got. So you've got a plan based on whatever happens, and then you come up with a new plan based on the information you've got. And you can say, listen, okay, now I'm going to hold this. I'm going to see if we do get a recovery. If we get a recovery in the day, then I might hold it for day 2. If we don't and we close at lows, then I'm going to close the position. So you start to come up with a plan. And again, you're not trying to make the money back. You're just looking at it as if you've been forced into long into this trade, and how's it behaving? Because of course, you know, if it gaps down and starts to kind of climb back up, then you need to just manage it as it is and say, okay, well, you know, maybe I'm going to get out of this a little bit less. Maybe then you can put your stop at that open point and say, well, it's closing at highs. I'll hold it for day 2 or whatever the situation may be. Now, maybe you don't want to do that because there's some extra gap risk coming as well, but you get the point. Imagine you've been forced into this position and you're managing it to come out with the least damage possible. So closing half is a good idea, researching what's going on as well to give you some insight into what it is, and then trading what's in front of you. So coming up with a new plan and say, okay, I'll close half, I'm going to put a stop below the open, let's imagine it did this, and I'm going to see where we close. I'm going to make a decision in the final hour of the day whether to close the position or hold it overnight. Or another option could be, right, let's see what happens at the open. Okay, we're pushing lower. If we push in the first hour of the open, we push lower and we don't kind of see any significant bounce that's not sold into, I'm going to cover it. So you give yourself some time, and yes, that might be, you might still get out of the low, guys. You might still get out with dangerous, not dangerous, an uncomfortable loss. But what it's doing is it's putting you in control. And what you're trying to do is what most people will do, and many people do, and we've probably all been there at some point, especially at the beginning of our career, is you don't want to be sitting in and this thing then does this. And it absolutely dies a horrible death. You could have come out any point in that day and taken your medicine and taken the loss, but you got stuck like a deer in headlights and it went lower, it went lower, and it went lower. And now you're in catastrophic loss territory. And not only that, but you're frustrated with yourself that you didn't cut it. You're in a trade you don't want. And now you start mulling around in your mind, well, if I cut it now, it's going to be the low. It's due a bounce. It's due a bounce. I'm too late. Whereas taking action immediately, some kind of action, closing half, closing the whole thing, putting a stop in, doing something on that initial thing puts you back in control of the trade. You may not like the position you're in, but it puts you in control, and that's powerful. It doesn't matter then the outcome. You just know that you're confident that if it happens, yes, I'll take whatever happens, but I'm going to put step forward, and I'm going to be the aggressor in this move. I'm not going to sit there and let the market dictate it. Yes, the market's done this. I can't control that, but now the market's open, I have full control whether I hold the trade or close the trade. So take back control, guys. Have a plan of action, something like that, closing half, entering a stop, or closing the whole thing is absolutely fine as well, but doing something is the key. Take care, guys. Keep your risk managed. I'll see you next one. Bye-bye.